right, good morning. So this morning I took buys today and I want to break down my trade and show you guys as to why I bought on futures, and I'm just going to give you the logical reasons as to why it seemed clear to me. And I want to be clear, I'm not saying that taking buys was the right thing to do today, because you can sell while price is in an uptrend and make money. I'm just showing you what made sense to me. All right, so looking here on the 4-hour chart, take a look at the lows. This low on January 27th over here on S&P on the left, it's looking down on Sunday, February 2nd. If you look at it on NASDAQ, January 27th is looking up at February 2nd, okay? So right off the bat, I have some divergence leaving a key level. So you can see that key level is a daily level on S&P, and on NASDAQ, it's a monthly fair value gap, okay? The next thing that I'm looking at is the price action here. This piece of price action from Monday to the morning price, right? This little range right here. And I'm looking at that on both markets. Take a look at how price opened up. We dropped, closed above the open, right? So this little line here says weak open. Look at how we closed above it and reached back down to test this fair value gap before going higher. And we did this on both markets, okay? So if you look over here on S&P, we did not close above the market open, all right, the weekly open, but we did reach down, test the imbalance, and expand higher. In the process of doing that on both markets, we got a new 4-hour imbalance, okay? So what I'm asking myself coming into the morning, I actually seen this last night before I went to bed. I'm asking myself, okay, is this gap going to push higher? Because the order flow is already established. We should not go back below the week open or this intermediate term low right here at 10 o'clock, February 3rd, 10 o'clock. This is an intermediate term low. We should not come back down here if the order flow is indeed bullish. Okay, so I'm looking at this and I'm asking myself, all right, we have this new 4-hour fair value gap here on both markets, but now I'm also seeing that we have a new bearish gap as well. So before I just jump into a trade or before I try to figure out what's going on, I want to see one of these fail and I want to see one play out. Okay, if the bullish gap holds, then external liquidity is here at the current weekly high. Because I'm looking at two futures markets, what you want to understand is one of these can get up here while the other market doesn't, and it can still be considered completed, okay? The setup can still be considered completed. So when I'm looking at this, I have to wait and see on lower time frames which one of these gaps is more likely to complete. So here's the thing. When you're looking at a gap on, say, the 4-hour daily or weekly, and you want to know, is it going to hold? You want to look for signs on the lower time frames that it's likely going to hold. And I want to show you some of those signs here for this 4-hour gap, right? Because logically, right now, I'm just looking at two opposing gaps where either one could take control. If the bearish gap held, then the external liquidity would have been here at the 2200 candle down here on both markets. So basically just the previous candle's low to the candle that you're looking at now. So dropping down to the 1 hour, I've got my London session range drawn out as usual, and I've got that 4-hour level still in mind, right? It just so happens to be exactly where my London session high is on both markets. But now I want to take your attention to something else. Look at this, and you can see it on both markets. And I'll just draw the arrow. Take a look at this 1-hour fair value gap. Price goes into it with one candle. Very next candle rolls over, but what do you see it not do? It doesn't hit external liquidity down here. So why is this 1-hour gap failing to complete? Why is price failing to hit external liquidity on both markets? You see that? External liquidity would have been down here. Maybe, perhaps, okay, maybe price wants to use the 4-hour, right? The bearish 4-hour to do that. Okay, fair. So this 1-hour gap to the downside is currently failing. So there's confluence there that price doesn't want to go lower, but perhaps it wants to use the higher time frame. Okay, fine. Let's see. If I hit play, let's see what happens. Okay, replay is just really janky today, but let me go to the next candle. Okay, so we enter the 4-hour sell side imbalance. Okay, fine. All right, so we already know the 1-hour failed to complete. Perhaps it wants to use the bearish 4-hour. All right, if this is the case, then there should be signs that price wants to roll over on the 15-minute. When I drop down to the 15-minute, take a look at this. Here on the 15-minute, the order flow is bullish. So if you take a look at NASDAQ, you can see how the down close candles are supporting price. Down closed candles are supporting price, and we're continuing to push higher. Even on S&P, you can see how we're getting breakaway gaps, right? Here is a gap right here that stayed open. Price closes above previous candle's high, continues to push higher, okay? Now here, price does form equal highs. I just had this line here from my session earlier, but I'm just gonna go to the next candle and just play this out. All right, so there are those equal highs here. Now look at what price does right here. It starts to fall underneath this 4-hour level. So this run up is price going into that 4-hour sell side fair value gap. And this is price now coming outside of that gap, all right? So same thing over here. We go into it, and now we're starting to play around a lot of volatility around that area. So if I hit play, let's take a look at the price action. We have equal highs up here on ES. We know that. Take a look at this. This little gap right here was tested on the 15-minute, and it followed through lower to external liquidity. Okay, great. But why didn't it flush down here and close below that external liquidity? Instead, we swept this low. So after going into this area of inefficiency, we hit external liquidity, but instead of flushing lower, going into that breakaway gap, we just swept and left this gap open. Another confluence as to, all right, price may want to continue going higher. All right, looking at it on the NASDAQ, the same is true. We tested a 15-minute gap, created a swing high, hit external liquidity, but look at the candle bodies. Look at how we literally couldn't even close below that external liquidity level on the 15-minute. Now, look at this massive candle in relation to this 4-hour line. Remember, this 4-hour line represents price going into a bearish 4-hour gap. A candle like this is telling me this 4-hour bearish gap is likely going to fail. And conversely, the bullish one will hold, okay? So if I zoom out, you see this gray box right here. We were still a part of a bullish setup that was in play, right? Same thing on NASDAQ. If I just zoom out, it was this level, aka the level I showed you at the very beginning of this video. So that's why I took buys. Every little thing kept saying it looks like a buy. We also had these equal highs up here that still hadn't been hit. So if I drop down to the 5-minute, I'll show you where my entry was. After seeing price hit external liquidity on the 15-minute, I drew out this high, and this was a 5-minute level as well, but my trade came in right before news, and this isn't something that I normally do. It was discretionary. It was really because of the circumstances that were in front of me, but price did go into a 5-minute level here. You can see that there, and again, we did hit external liquidity, but this level, this little high up here, became a 5-minute fair value swing high, and as soon as we closed above it, I placed my entry on that level. You can see we closed above it on 935, and I put my stop all the way below where the damage was done, okay? So this is where that damage was done on the 15-minute chart. And then I targeted 2R. Now on this chart, 2R looks like it's in the middle of nowhere on S&P, which is fine. But I was okay with that because at the time my entry, you can look at this on the chart, at the time of my entry at 935, the very next candle, if you look at NASDAQ looks to be heading right towards this 4-hour external liquidity. And that's what I was counting on. I was counting on NASDAQ to take out this high, which I'm going to show you on the 4-hour in just a second. I was counting on NASDAQ to take out this level, whereas ES would just take out 6,045, okay? Because the external liquidity for ES was much higher. It was up here at like 6,070. So I wasn't sure that price was going to get that high on ES, but it was highly likely on NASDAQ, okay? So I was looking for divergence at the highs. So if I just back out to the 4-hour and I go over that setup again, you can see right here, price going from internal to external. That was the idea for NASDAQ. You can see internal to external. Look at this candle compared to the S&P. Right? NASDAQ is much closer, but look at the bearish 4-hour gap as well. Price is just running straight through it. So again, replay isn't working too well today, but as you can see, price went straight after that level. My trade did go 2R, And here is the recording from this morning.